Welcome to Breaking News to Trading Moves. Today we're focusing on a major biopharma deal and looking purely at the stated market consequences that have been identified.
That's right. We're talking about Pfizer's acquisition of Metsera. It's seen as a really defining move in the weight loss drug category.
Okay, let's lay out the basics first. Who acquired whom and what was the price tag?
So Pfizer, that's ticker PFE, they won a bidding war for Metsera, an obesity drug developer, ticker MTSR. The price was approximately $10 billion.
10 billion. And what was key to Pfizer winning that bid?
Well, a major factor was Novo Nordisk, ticker NVO, stepping aside. Apparently, the main reason cited was potential U.S. antitrust risk.
The regulatory hurdle. Makes sense. And when might this deal actually close?
It looks like it could finalize after Metsera's shareholder vote that's scheduled for November 13th.
Got it. So $10 billion. That's a huge amount. Why was Pfizer willing to spend that much, especially considering they had their own efforts in this area before?
Yeah, it really boils down to needing a fast track back into the GLP-1 weight loss game. You have to remember, Pfizer had that setback. They had to halt their own oral GLP-1 pill program, danuglipron. That didn't work out.
Right, I remember that. So this acquisition is basically buying their way back in after an internal failure.
Essentially, yes. It gives them immediate and, frankly, premium re-entry into a very hot market.
So what exactly did Metsera bring to the table for that $10 billion? What makes their pipeline so valuable?
It seems to be about differentiation. Metsera's pipeline isn't just GLP-1 candidates. They also have drugs targeting amylin.
Amylin. Okay, so GLP-1 plus amylin. Why is that combination seen as so important?
Well, the thinking is that this dual approach could be key for the long run. GLP-1 helps with appetite and blood sugar, while amylin affects how quickly the stomach empties, satiety signals, that kind of thing. Getting both mechanisms might offer better results, and that's seen as crucial for standing out in what's becoming a very crowded field. They paid a premium for that potential edge.
Okay, that clarifies the strategy. Pfizer needed back in, and they bought a specific asset combination. Let's pivot then to the winners identified in the analysis following this deal. What's the first category?
The first group highlighted is Big Pharma, specifically those already in or making big moves into obesity.
And the reasoning?
Well, for Pfizer, it gives them instant optionality in arguably the fastest growing drug category out there. But maybe more broadly, a deal this size validates further investment and M&A in the space. It sets a benchmark.
So obviously Pfizer PFE is the direct winner as the acquirer. Who else fits into this category?
Eli Lilly, ticker LLY, is mentioned here.
Lilly, but aren't they now facing a much stronger competitor in Pfizer? How are they a winner?
That's a fair point. The analysis frames it more from a market validation perspective. Lilly is a leader, right? And this huge deal reinforces the size and importance of the market they're already dominating. It basically confirms their strategy and the continued demand.
Okay. So it's more about validating the whole sector's potential, which benefits the leaders even if competition heats up.
Exactly. When someone spends $10 billion, it tells everyone, including investors, that this market is real and has legs. That sentiment boost is seen as a positive for incumbents like Lilly, at least for now.
All right, so big pharma benefits. Where does the money flow next, thinking about who supports all this activity?
Yeah, that leads straight to the second category, the supporting ecosystem. We're talking about the suppliers of GLP-1 tools and reagents.
The picks and shovels play, basically.
Precisely. The logic is simple. More companies developing obesity drugs means more clinical trials, more manufacturing scale-up, and a huge increase in demand for specialized lab supplies, assays, testing, the whole infrastructure.
And which companies are named as benefiting from this R&D surge?
Thermo Fisher Scientific, ticker TMO, is one, and Avantor, ticker AVTR, is another. It's noted that TMO actually raised its guidance recently, specifically citing strong demand for the tools and services needed for these kinds of complex drug development programs.
Makes sense. As long as the gold rush continues, the suppliers do well. What's the third winner category? This one focuses on smaller companies, right?
Yes, the third group is the small and mid-cap obesity drug developers.
And the rationale there, increased M&A potential.
Exactly.
Yeah.
After a big, high-profile deal like Pfizer-Metsera, the thinking is that takeout odds and partnership interest just go up across the board for similar companies. Investors start looking for the next Metsera. Which smaller player has promising data that a larger company might want to snap up?
So who specifically is getting highlighted as a potential target now?
The analysis points to Viking Therapeutics, ticker VKTX, and also Altimmune, ticker ALT. Viking VKTX gets a lot of attention because they've already put out positive data on their obesity candidate, VK2735.
So they have clinical data to show potential buyers.
Right, and that makes them a potentially attractive target, possibly at a higher valuation, now that Metsera has set such a high-price precedent with this $10 billion deal.
Okay. So the Pfizer deal kind of put a spotlight on the whole tier of smaller developers.
Definitely. It signals what a large company might be willing to pay to get into the game or bolster their pipeline.
All right, let's switch gears. We've looked at the winners. Now, what about the other side? Which categories are identified as losers in this analysis and why?
The first category focuses on sentiment around rival incumbents in the obesity space.
And the prime example here would be
Novo Nordisk, ticker NVO. They were in the bidding, but they walked away. So the analysis views this as, well, they lost out on the asset, and now they face a stronger, re-energized U.S. competitor, Pfizer, entering their core market.
But hang on, Novo is still the giant here, aren't they? With huge market share and established drugs. Did they really lose, or did they maybe just avoid an antitrust fight and keep their cash?
That's the debate, isn't it?
Yeah.
Tactically, avoiding regulatory issues might seem smart. But strategically, the view presented is that Pfizer now has a credible path to compete globally. It just intensifies the competitive pressure on Novo. And Amgen, ticker AMGN, is also mentioned in this context.
Oh, Amgen.
Because both Novo and Amgen are now facing a landscape where investment in weight loss and related metabolic drugs is just ramping up dramatically, largely spurred by moves like Pfizer's. The whole sector just got more competitive.
Okay, increased competition for the big players. Let's move to who pays for all these expensive new drugs. That seems like a constant tension point.
Absolutely. That brings us to the second loser category, U.S. health insurers and the pharmacy benefit managers, the PBMs. Those exposed to rising GLP-1 costs.
The PBMs are the intermediaries negotiating prices, right?
Yes, and they manage the drug lists, the formularies. They're feeling the immediate pressure from the surge in utilization.
So just the sheer volume of prescriptions is the problem.
Pretty much. More drug options, like those potentially coming from Metsera's pipeline via Pfizer, tend to increase overall use. That drives up near-term drug spending significantly before any potential long-term savings from improved health might kick in down the road. The cost curve is pointing sharply up for them right now.
Are there specific insurers or PBMs mentioned as being particularly exposed?
The analysis highlights Cigna Group, ticker CI, and CVS Health, ticker CVS. There's some early data suggesting employer coverage of these drugs hasn't expanded much recently, meaning the insurers and PBMs are often absorbing more of the cost increase, which pressures their margins.
Right, that makes sense. A difficult position for them. Okay, final category of losers. This one looks beyond pharma.
Yes, Category 3 covers legacy weight management companies, the ones that don't have direct leverage to GLP-1 drugs.
So companies focused on diet plans, coaching, fitness centers.
Exactly. The core idea is that the growing footprint of effective pharmaceutical options puts pressure on these non-drug models. Demand seems to be shifting structurally towards drug-based treatments because of the results people are seeing with GLP-1s.
Their traditional business models are facing a challenge as people opt for medication. Who are the examples here?
WW International, that's ticker WWW, formerly Weight Watchers, is one. And Lifetime Group, ticker LTH, the fitness center operator, is another. While they might try to adapt, perhaps by integrating GLP-1 support services, their main revenue streams from diet programs or gym memberships are seen as being under pressure from these successful drug treatments.
Okay, so to wrap up the main points from the analysis, Pfizer's $10 billion Metsera deal, ticker PFE buying MTSR, is seen as a major move. It potentially boosts big pharma players like Eli Lilly, LLY, through validation, lifts suppliers like Thermo Fisher, TMO, creates M&A buzz for smaller developers like Viking, VKTX, but it also increases competitive pressure on incumbents like Novo Nordisk, NVO, strains payers like Cigna, CI, and challenges non-drug weight loss models like WW International, WW. Is that a fair summary?
That captures the core winners and losers outlined, yes. And maybe a final thought for you, the listener, to consider is this. You've got expanding drug options, but also rising costs. How will payers like Cigna, CI, and CVS Health, CVS, manage this? How will their need to control spending affect decisions about which drugs get covered and for whom, especially as more GLP-1 choices hit the market? That whole coverage and access battle seems like it's really just getting started.
That is definitely the key tension to watch moving forward. Before we sign off, we have a required statement to read. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author. Thanks for tuning into this broadcast. We'll talk to you next time.